Thank you very much for that warm introduction. See, after this comprehensive presentation, which Arpita did, I don't have to give you anything on alternative investments. So I can set the pace and request you to ensure that the masterclass and the panel discussions and some of the keynote addresses which has been planned for the conference, you are able to discuss little beyond what alternative investment means and what are the statistics behind it. I must also congratulate Aditya that he chose a date, which is the monetary policy for the Reserve Bank. There's a lot of uncertainty in the market what the governor is going to say, although these numbers have become so important over a period of time that run up to the credit policy every time, the whole country is debating whether it is a 25 basis point or a 50 basis point and what happens after that. And immediately it happens, which I'm sure it must be happening at the time when I am speaking to you. They say this was factored in and that's how it's going to be, and you start looking for the next mid-quarter and again keep on predicting. So when you have a conference of this type at a moment when you have stubbornly high inflation, you have a growth rate which is falling. See, if you have a growth rate which is the Hindu growth rate, there is no problem. But if you had a growth rate which had gone past the Hindu growth rate, had taken you to a point which was 8-9%, and then it has started sliding down, it's like telling an army which is moving at a fast pace to not only stop where they are, but to take a couple of steps behind. And that becomes very difficult in any investment climate. It's not that growth rate alone propels. Luckily, the subject of discussion today may not directly be related to economic cycles, may not directly be related to growth rate, may not directly be related to markets, because it is an alternate investments which you try to do as and when you feel how to take care of the uncertainties in the markets. The challenge for this conference is that the first half, the first 10 tables are the people who run the investments, and the next 10-15 tables are the delegates who either are advisors or related to these and how much they gain out of this. The first 10 tables are the best guys in the system, and they are going to talk to you whatever is best. But I think it is important for the next 10-15 tables to be able to absorb what has been communicated to you throughout the day and how much of it can you practice. After 3.5 decades in the financial sector, I have yet to come across very good financial advisors who can sit across you, tell you what's happening in the market, and also guide you into creating a plan for yourself. And I must say that we are living in a country which does not pay for advice, which does not treat advice as a service. And hence, most of the advisors come to you and their desire is whether it can result into any transaction. And if it results into transaction, he's comfortable. So I think the conference over here is a very important conference. It's very timely that so many of you are here when markets are being decided by the central bank governor. You are also here on a day when I think the public sector banks are on strike. So it does give an impression that this is actually an alternate investment summit, that you are not looking at the regular investments and are looking at the alternate investments. I have just a couple of suggestions to make because I'll try to cover up the lost loss of time in the initial session and try to finish by 11:15 so that you are sound for lunch as and when it happens at 1 o'clock. I represent the National Institute of Securities Markets. This is an institute which was set up by SEBI, but it has a very strong private partnership. It runs 6 major schools, and among these schools, there is one school which principally looks after investor education and financial literacy. There is also another school of excellence which looks after certification of professionals in the markets who operate the market. And I think these schools play a critical role for this industry of financial market. Whether you have a strong investor education and financial literacy, because you see, bulk of the investors, retail investors at least, do not know why bond prices move when the interest rates go up or go down. It is the advisors who communicate to them what exactly happens in the macroeconomic scenario to be able to appreciate and understand what exactly happens. You have already been told that between 2003 and 2012, the AUM under alternate investments has just kept on rising at a reasonably strong pace. So what is very important at this juncture, and I would request you, if you could take out time while these panel discussions and master classes are going on, to take a call that in these difficult times for both the fixed income and equity markets, are alternative investments the solution for the confused investors? You need to debate this, jot down a couple of points. I've requested Aditya, if it is possible, that to make the conference a little more meaningful, why don't we have a small group create a paper on which we can take a look and whether it can be put into any type of policy debate to be recommended to SEBI over a period of time. But it is very important that when we spend one full day with so many people taking out time to come to the summit, that we need to have a paper after the summit, within 15 days of the summit, to be able to take a stock on the different areas which we have discussed and to raise it to the regulator or to the concerned people in the system. And NISM is ready to take on the responsibility of collating this and putting it into a format which can be sent across to these participants. Can we develop an alternative investments marketplace that investor can trust? It is too nascent an industry, and the trust of the investor is very, very important. So if you debate on some of these issues, it will help to get out some crux for the paper to be coming out after this. I will also follow the same pattern which Arpita did of looking at those points, but telling you or requesting you what could be the discussion after those points as and when it comes up. For example, when we talked about the global scenario and how markets have grown, we need to take a call how much of this growth is because of the cheap money policy of the global central banks. You have to take a call on this. And will the boom in the alternative industry survive a fall in asset prices that a cutback on expansionary policies may induce? So you have to take a call that when these quantitative easing actually happens, will we be able to take on this, which has happened in the last 5 years? After all, there is a setback to the industry at the time of 2008 crisis, and that shows that there is some comprehensive relation with the liquidity in the market and the availability of money at cheap price. Another point which needs to be discussed, and this point needs to be highlighted, that there was a very high, and there is a very high fees and excitement in the alternative industry attracts the best investment manager, but it also attracts a huge amount of crowd who are not professionals in the market. Fees, I think today range between around 18%. So it is very high. And if you look at it, it will, whether we like it or not, it will push in a lot of people into the system who would be advising, and maybe that may become a concern for the regulator over a period of time. When the regulators came up in 2012 with specific recommendations, I think some of the things which was there in their mind was principally because alternative investments are complex, they are illiquid, they are hard to value, they are subject to misvaluation, they are inordinately costly to own, and they are difficult for investors and investment advisors to fully understand. And that is why it becomes an issue for the regulators wherever they are. And that is why you have seen not only the Indian regulator has not still created those parameters which came up with the global regulators, whether it was the G30, whether it was ISCO, whether it was the Dodd-Frank, all of them came up with reasonable, strict regulations because of all these aspects of they being complex, they being illiquid, they being hard to value. So I'm sure that when this sector grows in India, regulations will also keep on following from time to time, keeping in mind all these issues. One of the other discussion points which comes out of regulation is that the large part of investment in AIF globally is from institutional investors. The participants may consider what their experience is in India and what changes can be brought about by the industry to attract not only more institutional investors, but to create an environment for a strong retail investors also. The retail investors in the last 5 years have grown phenomenally in the US and Europe. We need to find out whether they are going to grow at the same pace in India or not. One other area of discussion which comes out and which you may like to take into point is that, is the Indian distributor, advisor, well prepared to tell the investing people about the risk involved and how to mitigate these risks? And are the processes robust enough to ensure that client suitably is not compromised? I think this is one area which all of you need to debate, because the market would be created by people who are talking about this in the market, who are advising people about this alternate investment. And I'm not sure that we have robust capacity building program by the different institutions to ensure that the advisors who are there. I have yet to come across an advisor who can sit across you and tell you as to what the macroeconomic scenario is and how, and if you have a portfolio where all you can fit in the investment, alternate investments, and how can you enrich it. So when we have so many CEOs and so many heads of organizations which are directly backing alternate investments, do you have a strong team which actually talks about this, or you double up as a team itself? If you double up as a team who's doing this, I'm sure that it will take much more longer time for us to get into increasing the space of alternate investments in the market. These are some of the discussion points which I thought I could make. Of course, there are some more which I have, and that mainly relates to advisors. I need not put it across to you. You have to have a plan. But We need to increase certification of people in the system. And I'm happy that the Association of Wealth Management is planning a program or a certificate on this, in this area. We will, from NISM, be ready to support it. And we will encourage people to ensure that advisors are certified and stay in a mode of continuous professional education. This continuous professional education somehow does not happen in our system. Most of our qualification, we use it as a gate pass to get into a job, and it ends there. And that's why we are doing the other end of the spectrum by starting financial literacy at class 8th in school. When those guys are busy carrying their bags to become an engineer or a doctor, you are trying to tell them about financial literacy, which has no immediate requirement for them. And this is a big challenge because you are talking to a generation for whom today is not important, but it is now. If it is relevant now, please talk to me. Otherwise, let's meet some other time. And that's how people look at moving towards gaining knowledge about these subjects. So I would request the first 10 tables, which are the principal tables here, which are also the major collaborators and have provided support for this conference or this summit, is to ensure that we build a very strong team wherever we are, and then only let them into the system. Because most of our growing up has been a problem from the point of view that every time you are at a peak of a cycle, there is a major crisis. And now with this world of finance taking over real economy in a big way. See, when we were growing up, real economy was creating the base for the world of finance. Now world of finance is creating the base for real economy. Nobody talks about manufacturing. Once in a while you have the IIP figures, they tell you that this is what it is. But otherwise the whole pink papers are only world of finance, which is very dynamic and which is very fluid. Changes the game at a very fast pace. So when you are dealing with the world of finance, you have to be comprehensively educated in the world of finance. I would also say, at the cost of being misunderstood, that please don't go by MBA Finance as the world of finance. Most of the MBA Finance would not have F of finance capabilities. And this is principally because today, if you want to send your son to the best finance program in the country, you don't know. But if you want to send your son to the institution where he can get placed in the best way, you know a couple of them. But you don't know which is the institution where you can send a person where he or she can do a good program in finance. I do not know of many premier institutions who also teach you about financial markets. It's not a module as a part of financial education. So I'm not very sure what finance we teach. If it is the finance with which we grew up, then I can tell you that when I joined the central bank, Basel used to be a beautiful city in Switzerland, famous for its jewelry and watch fairs and art fairs. Today, if you are a banker or if you are a participant in the financial markets, you are actually eating, drinking, and sleeping Basel I, Basel II, and Basel III. And we have forgotten that Basel has many other qualities. So I wish the summit all the best, but I request you to kindly put in a discussion paper after the summit, which we can take it forward and gain out of so many collective professionals who have gathered here from their knowledge of what they had spoken in the master class or what they had spoken in the different panels. So we look forward to having this discussion paper and continuing this venture of having the alternative investment summit every year. Thank you very much.
May I please request Mr. Aditya Gadge to kindly accompany Mr. Rajneesh Bahel and offer a token of our appreciation for Mr. Sandip Ghose. Can we have a big round of applause, please? Moving on to our next session, we have with us Mr. Shehzad Madon, and I would request him to throw light on the alternative investment trends, the alpha story in the Indian markets. Mr. Madon is the head of Portfolio Management Services and Alternate Assets. He has more than 25 years of industry experience across banking, investment management, and the financial services sector. He has held varied responsibilities, which include heading equity research, managing equity portfolios, heading the equities businesses, managing alternative assets, and leading the PMS business. He's one of the few investment professionals who have experienced across both the listed and unlisted equity space. This gives him a unique perspective of any investment. He's been involved with the real estate industry since 2005 and has been the guiding force behind the launch of the first ever real estate offering via the PMS route in India. He's been actively involved in the conceptualization, fundraising activities, and the fund management of real estate offerings. He has had the opportunity to do a wide variety of real estate deals across debt, mezzanine, and equity space involving varied developers and geographies. Request you to kindly step onto the dais, sir.
Sure. Thanks. Thank you. So can you switch the PPT on? Sure. Good morning, everybody. Delighted to be here. Let me get straight into the presentation material, and let me talk about what we understand as the alpha trends. Right? That's a nice sounding thing, but what does it mean to all of us? So the way we've interpreted it, alpha means opportunity, it means value addition, and it means the scope for wealth creation for all of us. And who are the different stakeholders out there? There is, of course, investment managers, there are wealth managers, and then most important, for who we all work, which is the investors, right? So we really need to create alpha for our investors, and along the way, if it can benefit all of us, that's absolutely wonderful. So while I would focus the bulk of the presentation on spending time on what this means to, let us say, the three classes, which is investors, wealth managers, and asset managers, I'll also very briefly, and we've been given a wonderful perspective both by the earlier two speakers on what's happening globally, but a few things of what we believe to be most relevant from a global perspective, and then some local trends which we believe should be relevant. So with that, let me kick off. What is the definition of alternate assets? Arpita really covered it, so I won't spend much time on it other than to say that out here, typically what is non-traditional, which is long-only equity, conventional debt, and let's say physical property or gold, is really what can be classified as alternate assets. The other way of looking at it too is what is mentioned down there. If you can't find a benchmark for it, it's probably alternative, right? So with that broad thing, and I don't think most of us as practitioners are particularly fussed about the definitions, but we pretty much know what feels and sounds like alternative and what sounds like the conventional, let us say, products, right? So pretty much that's the definition which we'd work with. And in the context to which we're speaking about, what we believe is alternate and what I'd be referring to is really everything which comes under the AIF today, erstwhile VCF funds, gold funds, infrastructure development funds, and those, the proposed REITs under the REIT guidelines. So that's pretty much what I would be referring to as the universe. This by no means is comprehensive, and I'm sure that there are very many other ways which you may choose to classify this, or any other way you may look to, let's say, look at this. But and I think what's more important, rather than getting particularly fussed about definitions and so on, is to just put, at least on the table, some thoughts from us about which way we see this industry going, what this means to us, and what I would hope to do at the end of, let's say, this session, maybe try to wind up a little fast. And if there are any questions or thoughts which one wants to share, I'd be really happy to hear them, because by no means do we know everything. Okay, moving on, just a couple of slides on what this means. Now, I am absolutely sure that you can't see those slides up there, but pretty much I think what you need to, the only takeaways which I would like to leave you with is that, like was mentioned by Arpita, that your industry really grew in terms of what's happened in the world. It doubled between 2005 to 2007. It had a fairly rocky period after that, but when you look at the pickup in asset growth, it's been extremely strong. And if you look at a period of 05 to 07, and this data is from a McKinsey study which I have faithfully quoted, is that the industry has grown, the alternate industry globally has grown by a little over 14%, relative to close to 2% of the, let us say, the traditional asset management business. So that's a significantly higher growth. And at this point in time, it accounts for close to, let's say, 16% of the global institutional investment is in alternate assets, and 9% from a retail perspective. So that's pretty much it. And in 2010-11 itself, it crossed the earlier peak of what it was at 2007, the alternate assets. So pretty robust growth, the point which was made earlier too. Other point which was made by both the earlier speakers too was what's happening on the institutional participation. Clearly big institutional participation, and some numbers out there how institutional participation has more than doubled over the last few years, as well as what it's likely to be going forward, which is a fairly robust growth. So clearly institutional investors are liking this part of the business. Now, something again in terms of growth on the retail side, but a few things which of course were mentioned, but I just highlight probably one point, or a couple of points which we really want to leave with you is, why are people gravitating towards this asset class? Partly the focus on absolute returns, because when you look at most alternatives, the focus is less on beating a benchmark. In many cases, there is very little of a benchmark, and more on delivering absolute returns. So when you get that perspective, and in an environment where the last few years have been, let's say, relatively difficult, especially for those who may be sort of benchmarked, more so in the emerging markets, alternate investment tends to make a lot of sense, which is more absolute return focused, right? The other one is, and there's another trend which is out there, and again I'm quoting from this report, which says that there has been a lot more focus on traditional managers using, let us say, the traditional retail platforms, which is mutual funds, etc., to push through alternate assets. And that, as a proportion to some numbers given out there, have grown very, very significantly. Incidentally, last 6-ish years, retail assets grown by 21% in the US in alternatives, and in non-US markets, it's 11%, which is way, way ahead of what's happening in those markets. Okay. Now, the other interesting slide, and that's below, from the perspective of, let us say, most of the practitioners out here, is, and this is a really interesting slide, the last one, and if it's not visible, I think the key messages there are the following. 13% of approximately US assets are accounted for by alternate assets, and but 25% of the revenue is accounted for by this asset class. Now that's obviously an opportunity for all of us. It obviously means investors would only pay us when we earn more for them, okay? And if there's something in it for all of us, which is the wealth managers as well as the investment manager, that's great incentive to do business, right? So that's another very interesting thing. So while one is where the volume is, the other is